Director in International Corporate Tax at KPMG. My views on yesterday's budget: we certainly did not get the sharp increases in tax rates that we were expecting. We did not get the dreaded and much talked about increase in the VAT rate. We did not get a super tax on individuals earning more than 1 million a year. What we did get was an increase in the effective capital gains tax rate, although again not quite to the levels that people were expecting. We also did get a new bracket for transfer duty, which will be 13% on property sold for 10 million and more. And we got increases in a whole host of environmental taxes, things like the plastic bag levy, the fuel levy, the tyre levy. And of course, the very interesting new so-called sugar tax on carbonated beverages, which will be a new source of revenue for government. Many economists felt that Minister Gordhan could have done more. The Rand certainly did not react favourably, either during the budget speech or immediately thereafter. But for me, there was a very positive takeaway from the budget. When Minister Gordhan started talking about the tax proposals, he said that he's deeply mindful of government's obligation to maximise the impact of every rand of tax revenue that is spent and to eliminate waste and corruption. And I certainly hope that he can make great strides in those areas in the next 2 years. He has already indicated that he will need an additional 50 billion a year for the next 2 years. He's paved the way for an increase in the VAT rate, as heavily debated as that might be. But if taxpayers feel that their tax money is being responsibly and wisely spent, and that we have better healthcare, better education, less waste, less corruption, then there will be less resistance to those tax hikes that are bound to come.